Good morning and welcome to Exploring Crypto, a new channel dedicated to help you find the potential in cryptocurrency. So today you may have woken up this morning, taken a look at the price action and thought nothing had actually happened. But actually we've had some pretty big news that's dropped overnight. Genesis Lending Company, a subsidiary of DCG, has filed for Chapter 11 bankruptcy. And we will go into that in a moment. But actually, if we just have a look at where the price currently sits, Bitcoin actually hasn't really reacted to the news at all. And whilst that may initially seem like a positive factor, actually what we need to consider is, are we just waiting for the markets to open? The news dropped after the markets closed last night. News started to spread about it through the early hours of the morning, at least in UK time. And so perhaps actually people haven't had an opportunity to react to it yet. We're going to now have a look at what has caused this, what's gone about, a little bit of history as to what this is, and then also have a look at how wide this can spread. Because actually a lot of this stuff can be stemmed all the way back to 3 Hours Capital. And if you think about how 3 Hours Capital fell with the implosion of the Terra network, then perhaps we're actually talking about all the way back to May. So some 9-10 months, and we're still feeling the ripple effects of it. But anyway, let's dive in and see what can happen. So as I mentioned, Genesis has now filed for bankruptcy. Genesis Global Trading has filed for bankruptcy after months of uncertainty over the state of its assets. The crypto lending company was a major FTX client that unraveled in the aftermath of the crypto exchange's collapse. A lender of high risk and often unsecured loans, Genesis had warned of possible insolvency as early as November, when it halted operations. Later that month, another crypto lender, BlockFi, folded. And if you remember, a couple of days or a couple of weeks after FTX had collapsed, they had frozen withdrawals. Temporarily, they called it. But that is, it's always a smoking gun within cryptos. Any exchange that is suggesting that they're going to have to withhold withdrawals, generally are trying to buy themselves some time for some restructuring, but more often than not, it kind of ends up leading them heading towards bankruptcy. We'll continue on with the article. Genesis had been reportedly working on a pre-packaged bankruptcy deal where creditors would agree to a forbearance period of between 1 to 2 years in exchange for cash payments and equity in its parent company, Digital Currency Group. We're going to actually talk about DCG and all of the subsidiaries that go into that a little bit later on, because it is actually kind of fascinating, and the implications of Genesis going under could continue to have ramifications across the rest of crypto, and we'll try and explain that a little bit later on. The news comes just over a week after Securities and Exchange Commission, SEC, charged Genesis and Gemini cryptocurrency exchange, founded by twins Tyler and Cameron Winklevoss, for illegally selling securities to investors through their Gemini Earn lending programs. And again, we're going to touch on the relationship between Genesis and Gemini, because this started at the beginning of 2023 with a rather public dispute between Cameron Winklevoss and the ex-CEO of Gemini, Barry Silbert. And I think that sort of shed a bit of light on perhaps some of the troubles that Genesis were having, and perhaps gave us a little indication of what was to come. See, it's only actually taken a matter of 2.5 weeks since those first dropped for everything to start unfolding. But we continue with the article. The program allowed Gemini users to lend their crypto assets through Genesis and were promised to earn up to 8% in interest. By the time Genesis halted operations in November, it held 900 million in Gemini Earn client funds, and there was allegedly around about 340,000 people that were involved in it, which has since been subject to contention between the two companies. The Gemini Earn program was shut down earlier this month. We'll talk about the feud. We're going to go into a bit more detail about that later on. I mean, the article kind of goes through a lot of the stuff we're going to talk about, so we may come back to this article in a moment. Just scroll to the top of this one. So a bit more about the actual bankruptcy that Genesis has filed for. looking at this article from Crypto News, Genesis files for bankruptcy as it seeks protection from creditors. And it talks about which DCG unit is next to fall, which again, we will try and cover. It's a bit of a reiteration here, but we'll read through the article until we've got to where we're looking for. After months of struggling, crypto lending and trading firm Genesis has filed for bankruptcy, but it is not the end of its troubles. Genesis, a unit of Digital Currency Group, DCG, said in a press release that Genesis Global Holdco, LLC, and two of its lending businesses subsidiaries, Genesis Global Capital, LLC, and Genesis Asia Pacific, PTE Limited, filed voluntary petitions under Chapter 11 on Thursday in the Southern District of New York. Those guys are going to be busy. If you think about FTX as well. But anyway, Genesis's other subsidiaries and other units that are involved in derivatives and spot trading, as well as custody businesses, are not part of the bankruptcy filing and will continue to operate. So we can have a look at that. But at the moment, it is contained effectively to these three companies and associated primarily with the lending platform. The announcement said, Genesis has proposed a roadmap to an exit, including a Chapter 11 plan. The plan that calls for a framework for a global resolution of all claims through and the creation of a trust that will distribute assets to creditors. The plan contemplates a dual-track process in pursuit of a sale, capital raise, and/or equalization transaction that would enable the business to emerge under new ownership. It will start the process of marketing and sale to monetize Genesis Global Holdco, it said, and it will start to repay the creditors. If there is no sale or capital raise, creditors will receive ownership interests in the reorganized Genesis Global Holdco. This is where it starts to get a little bit interesting. Genesis Global Capital listed the same range, 1 billion to 10 billion, for both assets and liabilities, as well as over 100,000 creditors, with the top 50 unsecured claims amounting to about 3.4 billion. Other articles that I've read have suggested that it's around about 8 billion. So I think we are looking closer to the top end of that spectrum rather than the lower end. As I say, the top 50 unsecured claims associated with 3.4 billion. The company also plans to use 150 million of cash to fund the company in bankruptcy. It is still allowed by Chapter 11 to continue operating as it tries to repay creditors. And it's amazing to me. I mean, I understand that it's completely legal, but it is amazing that companies can just put so much money aside to deal with the bankruptcy. And yes, I understand when we're talking about billions of dollars, it is going to be costly. Legal fees are not cheap. But we saw a similar thing with FTX and Sam Bankman-Fried when he was trying to use 450 million of his own Robinhood shares to fund his legal fees. And I think FTX itself had a circa $110 million put aside to cover their bankruptcy costs. Anyway, there have been reports about Genesis potentially getting ready to declare bankruptcy for days. Yet I think that broke on the 17th, so 2 days ago. And it was feeling heavy pressure of insolvency for weeks following the credit crisis that has hit the crypto industry. On January the 18th, as reported, it was suggested by people familiar to discussions between Genesis and its creditors that bankruptcy could be declared as soon as this week. And yep, they put it there. They are right. So the next paragraph, I think we'll read that. We'll skip down afterwards. But just days before that, it was revealed that Genesis owed $3 billion to creditors. We talked about. We've already mentioned 900 million to the Gemini Earn customers and more than 301 million to the users of Dutch crypto exchange Bitvavo. I've never heard of them, but there you go. Two creditors there account for 1.2 billion. Just have a quick scroll down because there are other news around this. Actually, I'll tell you what we'll do. We'll just go into sort of discussing a bit more of the understanding between Genesis and Gemini, how that relates back to DCG and even Grayscale, because it can be quite confusing. It has been going on, since November, and perhaps we've just not given it as much thought. I mean, to be fair, 2022 was pretty painful, particularly towards the end, and we got into the beginning of 2023, Bitcoin in the crypto market. It was green for a fair few weeks, bit of positivity, and you can be forgiven for not necessarily forgetting, but just sort of trying to move on and go with that. So this will serve as a timely reminder of what has actually happened. So it all started. I'd say it all started. That's not right. But on the 2nd of January this year, Cameron Winklevoss provided an open letter to the ex-CEO Barry Silbert, in which he very publicly outlined that Genesis had still failed to repay the money that was owed to Gemini Earn customers. They had effectively frozen their accounts and wouldn't allow withdrawals, had not been particularly forthcoming in trying to resolve the matter, and started to, I suppose, start throwing a bit of mud around. I'm not going to read through this letter in detail, only because he follows up about a week later. But effectively, warning shots were already fired at the beginning of the month. It's interesting that if you look on the right-hand side, Barry then starts to get into a bit of a Twitter spat with Cameron, and they're toing and throwing about this alleged 1.6 billion of funds that was loaned from DCG to Genesis, in which then Genesis should, in Cameron's mind, have used those funds to help repay the Gemini Earn customers. It's kind of confusing. Genesis to Gemini, they feel like they're quite close together in names. So yeah, if I do stutter and go over those, apologies. Anyway, so then we get to the 10th of January, and there's a bit of an update here for the Gemini Earn customers. But to be fair, the entire crypto Twitterverse was incredibly interested in this by now. It's a bit more detailed within it, and this was moved for not for a letter directed at Barry Silbert, but actually to the entire board of Digital Currency Group. And I will go through this because this actually details in quite a lot of detail. It provides a lot of detail into what Cameron Winklevoss alleges Genesis and others have done with the funds, how it's caused their problem, and he starts to allege fraudulent activities, etc., etc. The summary point of it is he effectively asks for the CEO Barry Silbert and other members of the board to resign, and once they have resigned, hopefully positive negotiations and discussions can continue. What we'll do is we'll just put a pin in this letter, we'll come back to it, and what I'd like to do is just sort of dial it back probably about 6 months. Just gives a bit of an understanding of the relationships between all of these parties, and then we can go through the letter and kind of understand what that means. So at the top of everything, we've got DCG, Digital Currency Group. Okay, now I mean, it's out there. They are the epicenter of Bitcoin and blockchain industry. They have been around for a while, but what is important here is that they are effectively the parent company of quite a lot of subsidiaries and crypto companies that you will have heard of, but perhaps not known that they are subsidiaries of DCG. And what's important is when we scroll down, we can start to see some key members here. So we've already discussed Genesis, but Genesis provides a full suite of services global investors require for their digital asset portfolios. It offers institutional funds, market makers, and other entities digital assets, OTC, over-the-counter trading, institutional lending, custody, and prime brokerage services. So effectively, it's an institutional lending platform. They've also got Grayscale. Grayscale's been in the news quite a lot recently as well. Grayscale is the world's largest digital currency asset manager. It sponsors 15 investment products, including the Grayscale Bitcoin Trust, which is the ticker GBTC, and the Digital Large Cap Fund. And effectively, it's not an ETF, but it is a way that institutions can buy into this trust, which effectively is priced against the value of all the BTC that is contained within that. I think there's a minimum lockup period for it. But it's just a way for institutions to be able to get involved with that. Now, obviously, because it's not crypto, but it's not an ETF yet, but it is an investment platform or tool then it's certain rules that has to abide by. Now that gives us good insight into information because they have to declare funds and money. Other ones that are interesting to know, CoinDesk. So a lot of you that read up on crypto news may have actually come across articles from CoinDesk. Well, they are owned by Digital Currency Group, DCG, and there's a lot of spotlight shone on that after the collapse of FTX, because initially there was a few positive articles that came through from CoinDesk about that stuff. That's since changed. But what was interesting was the allegations against Binance suggesting that they were the ones that caused the FTX crash. DCG were heavily impacted by the FTX crash because they were overexposed. I don't think that's news anywhere. And so there seemed to be quite a lot of FUD that was coming out directly from CoinDesk towards Binance. Now, whether or not that FUD is justified is another story. But what was a sub-story from that seemed to be that CoinDesk, ironically, was shining quite a strong spotlight on Binance. And were they being impartial, or were they trying to manufacture additional FUD as a way of trying to get back to CZ and Binance? We'll never necessarily know. Another one that you may have heard of is Foundry, a finance and advisory company focused on digital asset mining and staking. So by tapping into DCG's institutional expertise, capital, and market intelligence, Foundry provides North America Bitcoin miners and manufacturers with the resources needed to maintain and secure the decentralized network, which is just a fancy way of saying they own a very large mining company, which again, we know that miners are struggling quite badly at the moment. So try and go into just a little bit more detail. I'm not going to go through the websites, but Grayscale is a very important part, not just for DCG, but actually the wider picture of the Bitcoin market. They've regularly tried to apply, unfortunately have failed each time for ETFs through the SEC. The SEC have not granted any of their applications. And I know that Barry Silbert and DCG, as well as Grayscale, had been threatening legal action in the past and all sorts of things to try and understand why they keep on getting rejected. But the reason it's so important is Grayscale, or should I say, a lot of institutions have used Grayscale to build up their portfolio or their exposure to Bitcoin. Now, by owning GBTC, you don't physically own any Bitcoin. We need to be clear on that. But you own shares in their portfolio or their pot of Bitcoin that they have acquired over the years. And then depending on how many shares you are is what you can get back. The problem is they do own a significant amount of Bitcoin, and they've been buying that for years. So as the price was low in 2019, 2020, and then going on and through that felt fine, but they continued to buy through 2020, 2021, and obviously now in 2022 and 2023 we've seen the price of that significantly fall off. So their net asset value, or the NAV, has significantly dropped off. And what we saw in the beginning of 2021 was, instead of it having a positive correlation, it actually turned into a negative correlation, and investors who had bought prior to that were significantly underwater. There was a time a couple of weeks ago where you could effectively get a 50% discount on the price of BTC, how it was trading in terms of buying into the GBTC ticker. Now, there has been a bit of an uptick on that over the last week or so, and I think that's only around about 30%, but it is still negative. Now, should any of the damage from Genesis filing for bankruptcy scale over to Grayscale or even DCG, and they have to offset some of their BTC that they're holding to fill any holes or gaps, then, like I say, we've got a large amount of Bitcoin potentially landing on the market with not the demand to buy it up. Generally, that means that it will drive the price down until we do find the demand at a price. So it's certainly one to have a look at the moment. Genesis, we've already talked about in terms of what they do. I think just the easiest way is this institutional lending that they do down here. Yes, there is trading and derivative side of things, but it's the institutional lending that we're looking at, and we've already spoken about the particular elements of Genesis that have filed for Chapter 11. And then we've got Gemini, and I only put these up here just so you can see that Gemini are completely separate and so they are a trading platform. And then effectively in 2021, they reached out to their customers, and they suggested that they created Gemini Earn, which allowed their customers to effectively loan out their unused cryptos to other people that might need them, and they would receive interest or staking rewards, however you want to call it, on those. It'd be a passive income anywhere up to 8%. It varied on what asset you were lending out. Now, Gemini couldn't do this themselves, so what they had to do is they had to partner up with someone, and the people they partnered up with was Genesis. They effectively went into an agreement with them, and Gemini acted as the agent, if you will. So they would pass on their clients' details and their clients' cryptos to Genesis. Genesis would then, loan those out of collateralized loans, or however it needed to be. Interest repayments would come back. Gemini would take a little bit of a fee, and then the customer would take the rest. And this, through 2021 proved, very profitable for people. It was very popular, and at one stage, I think there was over 350,000 Gemini Earn customers. We know that at the time that withdrawals were temporarily frozen, there were 340,000 and roughly 900 million of assets under management. Obviously, the price of those assets is probably not worth 900 million now, but we know where we are with that. So these are the key players. What we'll do is we'll go back to Tyler's second open letter, and we'll just have a little look through that once I've had a glass of water. Okay, so Tyler writes, I can't highlight the letters as we go because it's a picture, but I'm in the first paragraph. I'm writing to let you know that Gemini and more than 340,000 Earn users have been defrauded. So this is, line one, defrauded by Genesis Global Capital LLC. They're one of the ones that have gone over, together with its parent company, DCG. So he's throwing muck at everybody here. Its founder and CEO, Barry Silbert, and other key personnel. These parties conspired to make false statements and misrepresentations to Gemini, Earn users, and other lenders, and the public at large about the solvency and financial health of Genesis. They did so in an effort to mislead lenders into believing that DCG had absorbed massive losses that Genesis occurred from the Three Arrows Capital Limited 3AC collapse, and induced lenders to continue making loans to Genesis. By lying, they'd hoped to buy time to dig themselves out of the hole they'd created. So, paragraph one, some pretty strong stuff fired out from Cameron Winklevoss there. And to be fair to him, in his mind anyway, he goes on to back this up. And we have other articles which we'll briefly go through, which potentially support his claims. Here's what happened. We are learning more by the day, but at present, the basic events that we understand are as follows. Genesis lent 2.36 billion of assets to Three Arrows Capital, a Singapore-based hedge fund that went belly up in June 2022. Now we know it was 2.36 billion because of their Chapter 15 bankruptcy documents that said Genesis had lent that much. So don't think that is undisputable. After collateral was liquidated, Genesis indicated that it was left with a loss of at least 1.2 billion. Now the reason for this is when they did that loan, it was an under collateralized loan. So the collateral that they put forward didn't marry up to the price of it. So effectively, once, as it goes on here, once the collateral was liquidated, they actually only got about 1.1 billion back, which left the 1.2 billion. I actually think his numbers might be the other way around, because we go on a little bit later, or certainly a lot of other evidence suggests that it was a 1.1 billion hole that was needed. But I mean, what's 100 million between friends? At this point, Barry Silbert had two legitimate options: restructure the Genesis loan book inside or outside a bankruptcy court, or fill the $1.2 billion hole. He did neither. So that's what he's suggesting. At this point in time, the Genesis loan book was approximately 8 billion, which means the 1.2 billion loss from 3 Arrows Capital accounted for roughly 15% of the loan book of assets. So pretty sizable amount just from one interaction. A restructuring could then have addressed this shortfall to achieve a full recovery of assets for the lenders, including Earn, in a short amount of time, and giving them direct access to liquidity. But Barry chose not to do this. He also chose not to fill the $1.2 billion home. Instead, he pretended to. And you can kind of feel the emotion in this letter here already. And we'll go on to explain how he, in inverted commas, pretended to. Beginning in early July 2022, Barry, DCG, and Genesis embarked on a carefully crafted campaign of lies to make Gemini, earn users, and other lenders believe that DCG had injected 1.2 billion of actual support into Genesis. Now, he's actually quoted Michael Moreau, who was the CEO of Genesis at the time, and there is a Twitter thread that will go through this. And I think this is probably an ideal time to mention. There's a fantastic YouTuber, you probably all heard of him, called Coin Bureau. He did a video on this about 3 or 4 days ago, even before the bankruptcy was announced. Within it, he goes through in detail a lot of where these tweets are and goes in through a lot of these documents. I have lifted a couple of documents from there, including this document by Data Finnovation, which I'll go through in a little bit, but definitely well worth checking out. I'll link it in the bio below. But if you haven't already, he is worth a follow and a subscribe. Trust me. Anyway, Michael Moreau goes on to put, DCG has assumed certain liabilities of Genesis relating to 3 Arrows Capital to ensure that they have the capital to operate and scale our businesses long term. So this is the ex-CEO of Genesis, and he tagged DCG in this tweet and nobody ever corrected him. So there was a fair assumption that what he said was true. This statement was false and misleading. In reality, DCG had not ensured that Genesis had the capital to operate. In fact, DCG hadn't given Genesis so much as a penny of actual funding to make up for the losses. Instead, and this is the crazy interesting bit, DCG entered into a 10-year promissory note with Genesis at an interest rate of 1%, effectively due in 2032. Now, you go and have a look at the 10-year yield market at the moment, and it's around about 3.6%. So the fact that it was 1% is absolutely crazy. But I think it's fair to say that Cameron is right in his next sentence. This note was a complete gimmick that did nothing to improve Genesis' immediate liquidity position or to make its balance sheet solvent. More on that later. And even though DCG was tagged in Moreau's tweet, no one from DCG, including Barry, bothered to correct his misstatement. So yeah, he's going to say that. And I think the letter goes on to say it, but just sort of try and jump the gun. Effectively, they took this 10-year promissory note, but then Genesis treated that as a current asset. So effectively it was like, okay, here's this 1.1 billion we've been given, and this is now a current asset. This is cash that we actually have, which is completely not true. That's not how the promissory notes work. But moreover, and again, I think Cameron goes on to it into his letter, no company in their right mind would value a 10-year promissory note at face value. So even if they were going to try and get some direct value from it, it would have been significantly less than the 1.1 billion that they were trying to suggest they had. So behind the scenes, multiple Genesis and DCG personnel began doubling down with more lies. Okay, we won't bother going through all of that bit. The accounting fraud. Okay, so this lie was perpetuated by a document titled Gemini Risk Metric Request. That's balls in from Swig. Attached to the same email correspondence with Gemini employees. I don't have sight of that. The financial position per asset section of this document contained what we have since discovered to be at least 2 crucial misrepresentations. It characterized the DCG promissory note as a current asset, which we talked about, and it valued it at 1.1 billion. This is now going into what we just discussed. First, as a matter of generally accepted accounting principles and common understanding, current assets refer to cash, cash equivalent, or other assets that can be exchanged into cash within 1 year. Obviously, a promissory note for 10 years falls outside of that, as he says, by a country mile. So they were certainly, I don't want to say cook the books, but they had misrepresented how that money currently sat on their balance sheets, etc. Second, and again, we talked about this, no market on earth would value an unsecured long-dated promissory note at face value. The net present value of a note would be heavily discounted, maybe 70%, to reflect a value of about 300 million. So there you go. It's definitely a big haircut on the 1.1 billion they've suggested. The improper accounting in the Gemini risk metric request document also existed in the Genesis balance sheet. that Balzinsvig included in the same July 6 email. These misrepresentations were a sleight of hand designed to make it appear as if Genesis was solvent. So you got to remember at this time, 3 Arrows Capital had just collapsed. Genesis was obviously significantly exposed to that. There was concern that they were going to go under and what the wider implications of that would be. So there was definitely damage limitation that was trying to be done by Genesis and by DCG. And Cameron Winklevoss, I kind of agree. I do agree with him. It's suggesting that this was just window dressing. It was completely fictitious and it was just made to look attractive. But the problems with that is that they put out a public positive message to say that Genesis was strong, we can carry on doing business, and they were effectively inciting others to continue to use that lending platform when they knew full well that they didn't have the funds to cover it. Anyway, we go on. DCG wanted to have its cake and eat it too, and Barry and DCG might have got away with it if it was not for the FTX collapse. So how did we get here? And this is another interesting bit. And sorry if this is dragging on. I'll try and speed it up. As a standalone business, it's inconceivable that Genesis would have lent so much money to 3AC, given the low quality of collateral that 3AC posted. Genesis made these loans because it was one piece of a much larger scheme designed to enrich the greater DCG enterprise. More specifically, Genesis was willing to recklessly lend to 3AC because 3AC was using the money for a kamikaze grayscale net asset value, next page because it hasn't finished there, trade. A recursive trade that ballooned the AUM of the Grayscale Bitcoin Trust, and as a consequence, the fees earned by its sponsor, Grayscale Investment, a wholly owned subsidiary of DCG. So, what does that mean? What actually has happened? Well, 3 Arrows Capital would take out a loan from Genesis using a collateralized loan with whatever it is. They would then be given those funds. 3 Arrows Capital allegedly would then send those funds back to Genesis, requesting them to be turned into GBTC. Genesis couldn't do that themselves, but they had an agreement to work directly with Grayscale, and they would then send those funds to Grayscale, who would then transfer them into GBTC. They would then go back through Genesis and then back to 3 Arrows Capital. Now, because of the positive nature of the NAV and where everything was, it then allowed 3 Arrows Capital to just repeat the process because there was profit to be made. So what they would do is then take that extra bit of money that was within it. They would then use that as collateral to take out a further loan from Genesis. Then once they've got that loan, they would then request Genesis turn that into GBTC, and the merry-go-round would continue. Why is that important? Well, every time that transaction was happening, I mean, Genesis is getting, these are loans, remember, so they're getting the interest rates from that. But also, Grayscale are getting fees for turning the funds, the BTC that they have loaned from Genesis into GBTC. And so it just keeps on going around. Now, that's exactly what Cameron goes through here. But this document, which as I mentioned is from Data for Innovation from the end of July, talks about this whole thing. It actually has a term, it's called daisy chain. And that is, it's a well-known fraudulent activity. Well, I'm not saying, allegedly happened here. Don't want to get into any trouble here. But it goes through in a lot of detail how they know this. And as I said to you earlier, because Grayscale is regulated, it has to submit documents to the SEC. So we have a lot of historical information that we can call upon to have a look at this. And I'm not going to go through it all now. It is definitely well worth a read. But if I keep on scrolling down, all you'll get to is this is what happened. So just to reiterate, 3 Arrows Capital here in the circle borrows BTC from Genesis. So it borrows with a small amount of collateral. It then passes the BTC back to Genesis as an authorized participant to create the GBT shares. Genesis duly locks the BTC in the trust via the Grayscale and returns the shares. So it then creates a new GBTC, locks the BTC in the trust. The GBTC comes back through Grayscale, back through Genesis, up to 3 Arrows Capital. And And then these shares are traded at a premium, so it represents free money to 3AC. So there's a profit within there. So then 3AC pledges those shares back to Genesis as a USD loan. If the premium was large enough for the loan to be worth more than the BTC they borrowed at the beginning, so that's the profit. And then what they do is they just go, right, well, now can we have a bit more BTC, and we'll just repeat that. And to be fair, this isn't a new story. Even within cryptocurrency, I remember the Abracadabra site, and it was a lending platform, and back in the day of DAOs, and people getting very into that. People would take their cryptos, they would then stake them on or loan them out, if you will, on Abracadabra. They would then get some more of whatever those tokens were. You didn't have to take it in there. The example that I saw people using was with, I can't remember if it was Time or Wrap Memo, but you'd effectively put forward your Wrap Memo into the system, you'd get some back, you could then convert that back into Wrap Memo, you could repeat and rinse and repeat. And obviously as a rebasing DAO, you kept on getting repayments. And at the time that looked good because the back price was pretty high, but the actual price was significantly higher than that. So you could set your liquidation levels significantly away. Unfortunately, the bottom of that fell out at the beginning of last year. But it just goes to show that, retails are suckers falling for it, but institutions are doing exactly the same. And it does call into question that, if you take all of these schemes that were doing that, and you take the Terra, Luna, and the Anchor protocol with 20%, and, we were at a time where we got to about $3 trillion worth of value in the cryptocurrency market. But how much of that was just inflated internally? I dare say a significant amount. And so that's why I feel like this correction, although it's not been as severe as other bear markets, this correction was necessary because it wasn't a fair value. It wasn't a true value of what the actual market was valued at. Yes, there was hype that drives it up, and I get that the whole cycle of bull markets, naturally leads to that. But we also had this other element, in my opinion, that was just, moving money around or moving assets around between themselves, driving that price up, sucking in retail to get on the back of it, and then, they plowed even more money in, which drove it up even further. But you look at things like this and you realize it was just never going to be a fair game for anyone in retail. Anyway, we go back to here. So I'm just trying to skip through. I mean, the rest of this page just summarizes what we've gone through, and then he starts using nice little metaphors down in there. We get onto the final page, and the original accounting for this was the second bit. Instead of booking these swaps as risky derivatives that they were, so I'm leading back to the 3 Arrows Capital, Genesis collateralized loans. Genesis hid them by mischaracterizing the first and last legs of these swap transactions as collateralized loans on the balance sheet. This made the Genesis balance sheet appear healthier than it actually was, fraudulently inducing lenders to continue to make loans. So this is the second part of his fraudulent claims he's making. Then June 22, the music stops. 3 Hours Capital collapse off the back of the Terra collapse, laying bare to the poisonous fruits of this radioactive trade. He is getting, again, I mentioned, you can really feel the emotion in the letter. Instead of stepping up to solve this self-created problem, and despite having earned more than $1 billion in fees, all at the expense of Genesis lenders, Barry refused to take responsibility. Instead, he resorted to committing fraud to protect his ill-gotten gains. Okay, I think he's definitely falling off it now. And then, so then he just goes on to say that he needs him to retire, to be sacked, and then he'll continue to discuss it. But the story hasn't really ended there, because 8 days after this letter, Chapter 11 is filed, bankruptcy is filed for Genesis lending platform, which we've discussed about. But what does that actually mean for Gemini Earn customers? Are they going to get a bite of the cherry? And also, let's not forget, we already mentioned the SEC are also trying to charge Gemini and Genesis with, I don't know what the actual term's going to be, but securities fraud of some description due to the Earn program that they work together with. So we've got to see how that works out as well. And I don't want to get drawn down that rabbit hole. But Cameron has been on today on Twitter. And he's given an earned update. So this evening, Genesis Global Capital LLC filed for bankruptcy under Chapter 11. Crucial step towards earn customers being able to recover the assets. Been trying to work around the clock to negotiate a solution with Barry and DCG, but they refused to offer creditors a fair deal. So it does seem like they were at least trying to get around the table. Good news is that by seeking the protection of bankruptcy court, Genesis will be subject to judicial oversight and be required to provide discovery into the machinations, don't know if that's the correct word, that brought us this point. Crucially, the decision puts Genesis into bankruptcy, does not insulate Barry, DCG, and other wrongdoings from their accountability. So that's good to know. We've been prepared to take direct legal action. So unless Barry and DCG come to their senses and make a fair offer to creditors, we'll be filing a lawsuit. So it looks like he is going to line up to file a lawsuit. Meanwhile, we use every tool available to us in bankruptcy court to maximize recovery for earn users and other parties within it. We also believe that Genesis, DCG, and Barry owes them an explanation. Bankruptcy court provides a much needed forum for that to happen. This marks an important milestone in our effort. I think the reason I've spent the last 30 minutes going over it, it actually is a very important part of the crypto current environment. This is going to have long-lasting ramifications. We haven't really seen what the market is going to react to it yet, but will Genesis have to sell a significant amount of their assets to cover these costs? Yes. In bankruptcy, that's what they're going to have to do. How far does that stint go? How does that interact with the Grayscale Trust and the GBTC and DCG itself? We already know that CoinDesk has brought on board specialists to try and find a either partial or wholly buyer for themselves. So it looks like DCG are trying to offload that as well. Is that a case that they want some extra funds? Miners are struggling massively with the cost of living crisis, the energy prices going up, price of Bitcoin falling down. So Foundry might also be in trouble. It just feels like a lot of the subsidiaries of DCG are really struggling at the moment. And it's something that we really want to be keeping our eyes on. I mentioned it before, but so Coinbureau's massive crypto's hidden risk, DCG, Genesis, and Gemini. I'll put a link of this into the description, but this was a video that came out, I can't even see what the date of it is, 3 days ago. So very good there. So we'll just wrap it up by just having a look at what Bitcoin's price is doing at the moment. So if we just put this on the larger screen. So, I mean, this is the 4-hour chart. We've had that huge rally up from the start of the year, sort of around about 30% rally. And then we've just been ranging a little bit. We had that fall back off the recovery, but, to be fair to it, it bounced rather nicely off there. And we're starting to sort of build that up. For me, there's many different ways you want to call it, but there is a potential topping pattern here, whether you want to look at it more as a Bart Simpson pattern in terms of just it sort of spiky there, and then maybe we start to see that leg down. I've seen some people talk about potential head and shoulders forming, and this is the right shoulder. And if that's the case, we might start to see, certainly that 20K level tested. But the sharpness of what this rally up doesn't leave that much local price support. So it'd be interesting to see how that rallies around that and moves. But generally, we would like to see a pullback of regardless, just because this was not a healthy climb on the way up. So a pullback, find support, and then to rally off that would make complete sense. However, I must admit that's not really where I'm feeling it is at the moment. I don't feel like there's particular. I've not got it on here. There's particular volume that is driving these rallies up, all these sales at the moment. So it feels a bit stagnant. We've got this news that's just coming out that there's other things in the market that concern me. Just the fact that the narrative has so suddenly shifted to being very bullish. And don't get me wrong, it is very positive to see a green January. It's not often that we get to see anything like that, but we shouldn't get caught up in the fact that just because we've had a 30% bump here doesn't mean that we can't start to fall back down. And if I just drop this onto the weekly, what do I mean by that? So if you have a look at some of these pumps over the summer, this was a 30, let's get it, 30%, 33% pump over the summer. We still lost it at the end and came back down. Where are we at the moment? If we take it from the very bottom to the very top, it's around about 40%. So, it's positive, but we haven't got ourselves out of the woods yet. For me, we've got this level of support or resistance right here. I want to see us break that initially, but I can't get really excited, I'll be honest, until we actually break the summer 2022 high. So around about 25k, we break that and we build support on it, and then I think the narrative, in my opinion, will shift. So that's what I'm watching at the moment. But the fact that we've come up here and we've stalled, you know, we've still got a bit of time left. You know, it's the weekly candles here, so there's plenty of time for things to move. That's our first barrel. That's what I want to see. Need to hold 20k if we want to see any positive from that. I will accept that we may pull down to 19k, but I'd like, if we did, what I'd like to see is not a V-shaped reversal, but, you know, a fairly positive move up rather quickly, rather than it just sort of meandering out to the right, because that would suggest to me that there's further weakness there. Anyway, I hope you've enjoyed this. It was my first ever live, so thank you for bearing with in that. If you liked it, please subscribe to the channel, hit a like on it. I mean, I'm not expecting anything really, because as I say, it's my first one. I'm doing this more for my own experience, but I really enjoyed it. I hope you enjoyed it too. And yeah, I shall see you all soon. Thanks a lot.